Welcome to Momentum Monday. Howard, how was your weekend?
Awesome. And it's a good Monday. We're going to get right to it. It's July 23rd-ish, Monday, as always. And we are happy to both be in San Diego. Never in the same, even though we're in the same office today, not in the same room. Ivan and I have gone years without meeting. It's perfect. It's a perfect relationship. I only know what he looks like from, I don't even know if that's you. You could be a woman named Butina, for all I know, a Russian spy.
That's possible.
What do you think? Trump, traitor, not traitor?
No comment.
Well, you called him a traitor an hour ago.
When?
Okay. There's no video proof, but I have it. I've been nothing if not a rebel. Okay, so thanks for taking time away from Naked Volleyball, Ivan, in San Diego. Let's get right to the markets. Today is big day for Google. We weren't going to necessarily talk about Google, but it is earnings, and I have been. It's in my 8 to 80 portfolio. I've owned it for 100 years, it seems, and it's kind of been. I've been complaining over the year that it's been an underperformer, but didn't give up. Today looks like maybe a payday.
Yeah, trading at new all-time highs in the after hours at around 12.50 after crushing estimates.
Mm-hmm.
So what do you think? Is it going to fill the gap tomorrow? Or
you're right. We were chatting about it before. Google, relative strength 78. Well, relative strength 78. If the stock holds, as you were saying before, the expectations are what matter here. The stock is trading up, all-time highs. It was something that we've chatted about for the last couple of weeks. I added more to this, and now we've got a 4% pop. Which on market cap 5% is a $40 billion move after hours. So we're starting to get into some real numbers here. These are crazy kind of gaps when you're starting to talk to $40 to $60 billion after hour moves. But Google's numbers were incredible, $32 billion in revenue. So they're, $120 to $150 billion a year in revenue. And we're not talking about low margin revenue. We are talking about massive margins.
What's interesting about Google is that usually companies with the size of Google, they have their stock price grow along with their earnings. In Google, that's not only the case. It's not only earnings growth driving their price, it's also multiple expansion. Because if you look at 2011, they were making $18 per share and their high was $3.20. In 2018, they're expected to make 44, which is not even 3 times, but they're trading near $12.50, which is four times increase in price. So there's definitely multiple expansion, which means that market expectations have been growing.
Again, I don't think anybody. Yes, can you hear me, Ivan?
Yes.
All right, so we can pull up a post of mine today about Twitter where I talk about Google. And I think that what people don't understand, this is not a Warren Buffett stock. This is not a Warren Buffett market, although Warren Buffett's doing great because insurance and the few tech stocks that he owns and the fact that we are in a bull market. But in today's open letter to Twitter, where I berated Twitter for underachieving, I talked about the fact that, Twitter's $36 billion, Google's $800 billion, and now $900 billion. And but Twitter is undervalued. And I would argue that Google is undervalued in the same vein. Not in the Warren Buffett way of valuing business, but in the network software world. Software is a brain, okay? And it's not a dumb brain. It is a brain that keeps learning and doesn't need, as much as they chase social, Google, for 5 to 6 to 8 years, maybe it's good that they never got social because they just stay focused on what they are, which is a brain, right? And, so Google is this brain, and they take, if you go back to the Google chart, they take this data and then invest it in the smartest way possible, meaning it's a brain that is allowed legally to invest. And so when they invest in startups, there is a much higher percentage possibility that the startups they invest in are going to be long-term successful because of the data that they have. So I don't know if this is cheating or unfair, but this has always been my point. If you're going to own an ETF, don't own the SPY, own Google, okay? Or own both. But Google is your tech ETF for the future because it is a giant software brain. Now, the other thing I was going to mention about Google is it's hard for people to understand the company because it has so many moving parts. So analysts can only get this thing covered in hindsight. They can't really understand the future of Google. So I don't think you can, you can trade it technically, but as I said, it's and I said it today on StockTwits, if it was going to own a stock for 25 years, and I'd hate saying that Google would be the company. And now let's go, Ivan, to the NASDAQ. Talk about how this, with the earnings that you were saying, would be factored in if the stock closes, at all-time highs tomorrow.
I think market expectations currently for tech stocks are so high that I'm very doubtful that those gaps will follow through. And popular stocks like Google, they tend to have a rally a week or two before earnings just because expectations are high. And then after they gap up, they just consolidate sideways. So I think it would be a big change and a show that the market sentiment has improved substantially if tomorrow Google is able to follow through. I think the odds are, look at what happened to Microsoft on Friday. They also crushed earnings, but they barely held their gap. Mm-hmm. So I think for tech stocks, expectations are very high at this point. And
at the same time, they're heavily shorted. If you look at Google, it doesn't move 50 billion because everybody's long.
I would be pleasantly surprised if they're able to follow through in this relatively slow.
If it closes above 1230, that's still a massive 3%.
Oh, it's a new all-time high. So their numbers are great.
How many billion-dollar company? I think 900 billion after this gap. I don't think it's on. You have to go to Google.
Close.
I think you have to go to the other chart. Google.
Well, they're up about 4%. So close to 900, yes, you can say that.
So no one talks about them in that race to $1 trillion, but they're closing in themselves. A couple good days, if the market really loves this, it's going to be close to $1 trillion over the next week. Okay, so let's get back down now to the NASDAQ 100, which is probably the chart of the week, if not the year. We are now in records are made to be broken. Right now, the NASDAQ 100, which includes Google, is its longest streak closing above the 200-day moving average. Okay, this is fantastic. The only negative of this is the hangover that's going to be left when this trend ends. But we'll worry about that when we worry about that. You make hay while the sun is shining, and trying to predict the end of these fantastic trends is proven to be not a smart thing. So the hangover coming, Ivan, is going to be brutal because the hangover, in the end,
Yes, but that's usually very hard to time properly.
Yeah, but when you have the longest of all time rides above the 200-day moving average, the inevitable corrections could be painful. So people need to remember that. Enjoy this ride. I'm still not calling an end to this, but we're always one day closer to the end. Let's go around the horn to some ideas, because I think on the tail of Google winning, I think this is a big day for machines and for robots. Let's look at AVAV, which is a drone stock that we've talked about before. The machines gives us an aerospace drone company, pure play, continues to just, no one's heard of it, but continues to, we talk about it every few weeks, continues to just consolidate and go higher. Software stocks, and e-commerce, let's look at Shopify. Yep, they're trying to put taxes on all this stuff. One day maybe all this will matter, but Shopify, crashes. 175 to 140. The dips seem to be great places to buy these. Don't chase these necessarily away from their index moving averages, but again, Shopify strong.
Which one?
Also, e-commerce stocks continue to hit all-time highs. Can you not hear me?
I didn't. Which one?
Square and PayPal.
Oh, PayPal, yeah. PayPal definitely trying to break out from a long base.
Snapchat shut down their Venmo competitor today. I talked about Twitter underachieving and being bolder. Snapchat. Let's look at PayPal. How can Snapchat not have which controls the teen market? Ivan, can you hear me?
Yes.
Snapchat. Let's pull up Snapchat. Look where Snapchat languishes. Meanwhile, my kid's on that all day, but meanwhile, it opens a Venmo account. There's no reason why Snapchat should not have a wallet, and so they're not being bold enough. And so you can see the old guys at PayPal, which did a bold acquisition to buy Venmo, and they're getting all the benefits from it.
Yeah, I think it was an amazing purchase, and because of that purchase, their price to earnings multiple is expanding.
Yep, Square, another one. Even as Twitter kind of misses the transaction in crypto and financial space, look at Square, Jack's other company, reaping all the benefits, trading at a massive multiple, earning growth tremendous and much more predictable and a better model than advertising at Twitter. Again, these are all the leaders. Let's go through some new names, Ivan, and some IPOs. So the market is strong. There's just I don't see much weakness. One day it'll end, but I'm trying to be negative right now just does not work.
Yes. So before we go to IPOs, there's one thing I want to mention is that the latest big development is that long-term interest rates are rising again, which is a big boost for financials, which have been struggling for the most part of 2018. And financials are definitely play an important part for the S&P 500. So if they keep rallying, I think they will continue to support S&P 500. Even without tech, S&P could continue to rise with the financials rising right now.
Okay. Let's go through some new names.
Some old new names. I think their IPOs are setting up again. MDB tried to break out today.
Yeah, we love this at the $30. Now it's doubled. Okay.
Yes, it's ranked number one on the SO50 list for this week.
Wow.
Some other recent IPOs that I think are looking constructively. Pivotal Software.
Last year, Pivotal Software. Last week, PVTL. Okay, another one. Look at Spotify, one of the horsemen.
Yeah, Spotify. They're trying to break out as well. Another one is
one that I liked in financial. It took more of a roll up, Ivan, is ENV, Envestnet. ENV. They own the hedgies. This is one that's on my list. It's a roll up, so I don't love buying roll ups, but at the same time, this is back end financial, RIA, investment manager solutions in a kind of a cobbled together technology platform. But you can see it breaking out to all-time highs.
It's looking amazing. I mean, this chart is just incredible.
A Plaid competitor called Yodlee, which was always a perennial underachiever and kind of got the business model wrong. And I think it won't show up on many lists because of the base and because of the roll-up stature of this, but this is a really interesting poor man's financial engine stock. It's hard to get a piece of like what's really driving this because there's so many pieces to this platform. But again, I mean, this is a breakout that today looks beautiful. So that's a fresh idea. What else do I like? You can see Twilio breaking out again, TWLO.
Yeah, and keep in mind that those stocks, many of those stocks have doubled in the past few months. So expectations for them, again, are super high. So be careful holding them over earnings. Like, I mean, if you're sitting on a double before earnings, it just makes sense to at least hedge or take some off.
Yeah, okay, I agree. Zillow, there's another internet giant, kind of quietly, more all-time highs.
It's setting up near all-time highs.
Yeah,
which is interesting with the home builders looking so horrendous.
Yeah, I don't know. If you own home builders, you're just lazy. If you own home builders in this environment, you're lazy. Should you be buying real estate? I don't know. But if you own the actual home builder stocks, I don't know. We can't help you. Okay, so get that off the screen before I throw up. Let's take a look at Okta, this company that we've talked about before. Back again, pullback, 61 to 40 on earnings, sneaking right back up to all-time highs.
Well, Okta is the ultimate proof of how strong the current market is. Look at here, when they kind of missed estimates, they sold off on their last earnings, and they managed to recover so quickly. This doesn't happen in a bear market. Like usually bull markets brush the bad news aside, and this is exactly what's happening in software stocks like Okta.
Well, I just think it's very hard. The headlines are scary. So what happens? You get scared on a Sunday. Trump talks about war with Iran, but in the end, with Trump, as crazy as this stuff always sounds, it's just a distraction to the underlying fundamentals of the world, which is connected, software driven. It makes sense to me the home builders are weak when the president is talking about war. And so they aren't going to bounce, and interest rates will rise as people get nervous. But at the same time, is it really affecting, software deployment? I just don't know. Not that there's not certain areas of weakness out there, but at the same time, the areas that keep bouncing back, happens to be software. Okay, so let's go to the SL50, Ivan. I think this will show, once again, why our strategy, or how we build lists is working. We've been talking about a lot of these stocks. We can't own them all, but if you look at Stitch Fix, Twilio, Shopify, Etsy, Zendesk, Mongo, these are all names that we've been talking about for months and months and months. And it's not because we're geniuses, it's because we've created filters that that you offer on marketwisdom.com, and then I talk about on my blog in Peloton, where we try and dumb this down for everybody to understand that the collective intelligence of money, the best game in the world, has been spotting these companies for months and months and months. If we go back up to the top of the list, Ivan, Mongo's
I'm sure that most people have never heard of Coupa Software or Intricon,
24 weeks, 73%,
or Intricon, which has more than doubled in 11 weeks. I mean, you never know how far a momentum stock can go once it breaks out. I mean, IIN, who would have thought that they would double again after doubling in the past few months?
Yeah.
And this is the charm of momentum.
Yeah.
And trend following.
You've got to start with the best filter. I think Market Wisdom has taken upon, this is what you and I kind of put together, if you go back to the list, it's taken upon 20, 30 years of reading what we think are the best momentum tools and products, adding a little bit of our own flavor to this with weeks on the list, entry price, distance from low. I have my own filter on top of this, which is around social. you know, the fact that I like finding these companies on lists that have no one's heard their names, because the potential, especially if it's a product that I understand, because at some point everybody's going to hear their name. And I think we see this with Etsy, meaning, you know, written off for dead. Now they have a model that works. You know, yes, a lot of vendors dislike it because they just same reason they dislike Amazon, but Etsy is now a global e-commerce platform, and it's just a matter of time. Same thing with Square. I got that wrong because I didn't understand their international strategy, but I guess it didn't matter because the US model's big enough to grow that company. So on me. So you can't get them all right, even if they're all on the list. So you've got to have a way to curate it down, which is what we do at Market Wisdom. You've got to find smart people that help explain these concepts to you so that you can own great companies with great management teams, with exploding earnings, with the right momentum, and then hang on for dear life and have a, you know, follow some smart people and not be greedy to get off at some point, because this is not about you being smart or me being smart. This is about making money and about, you know, a lifetime of trying to catch a few trends that change your life. This has been the trend the last 2-3 years. You know, even with the negative headlines, media headlines, it's been one of the best markets that I've ever invested in.
Well, the list helps you fish in a pond out of 50 stocks instead of trying to fish in an ocean filled with 8,000 stocks and 25,000 ETFs. Right? Like it's a huge time saver.
Yeah, and you know, listen, of the 10 or 15 stocks that I'm pounding the table on, at least they're all now on the list. Some we catch a little early because we think they're going to make this list eventually. I think Disney will make this list. It's not on the list. I think Google will show up very soon. It's not on the list. You can't, again, you've got to own things that you really feel you understand and know catalysts. So it can't just be a system. It'd be nice if it was just a system, and I'm not have anything against 100% pure automated systems like Market Wisdom. But in the end, you're going to have to position size and do all that. And there's a lot of, you know, human stuff around that. Couple stocks that I've missed, Ivan, I don't know if they're just too small. If I look at this, I talked about this FNKO, Funko, which is kind of a crafts marketplace. It's killing me because it was too small, I guess. I don't know what the market cap is to show up. But around $9-10, it was, you know, I was starting to hear. Yeah, so it's a $1 billion company. Look at that stock over the last month. Don't chase it here, but there's definitely anything with a marketplace, a unique marketplace is running. And then on the biotech, one thing that hasn't slowed down under all this Trump nonsense are a lot of small cap biotechs. You know, Trump is busy fighting the media and fighting drug companies and, well, just about everybody, but he doesn't understand biotech. And, you know, his agenda has been such that these companies are creeping up and a lot of stuff's going on. Are
you talking about Rita?
Wow, look at that today. Let's look at TNDM. It's a kind of a diabetes stock, Tandem. It's gone from 2 to 30 in the last year and a half. You know, a lot of friends kind of were talking about this, and I missed that. So you're going to miss ideas. I miss them all the time. You can't own them all. We're just trying to give you kind of a glimpse on this Momentum Monday. There is a lot of stuff working. That would be the takeaway of this week. I'm going to sign off, Ivan. I really appreciate MarketSmith providing us the money to make this show, kind of help ourselves learn the markets. Have a great week. I hope Google closes strong, and we'll be back here next week.
Yes, see you next week.